Hi, folks. This is Lee with the Market Sense for the week of January 22nd, 2019. The charts in this presentation are provided to us courtesy of Gettess and their Trade Navigator software. And our first chart is looking at a weekly bond market chart. After this big run up here, we thought they might be due for a pretty good crack, and last week showed some signs of it. Not a big week down, but they did kind of close below everything. That kind of looked like it was leading to I don't know, 143 or so, 143.24 down here, possibly even to the mid Keltner at 42.14. Both of those looked very likely this week. Now, they could still do that, but we had Monday on Tuesday this week, and they kind of turned back up, and they could have held this. This is 144.26 is this lower moving average here. And if they had held that, that would have lent credence to them wanting to go substantially lower, possibly not even holding any of these support levels. But they don't appear to be doing that. They've recovered nicely and look like they're heading up to 146 roughly. The 146 area is the middle moving average. That's kind of the critical area to this week. I mean, I'm not saying they can't go back up here. They sure can. But the 146 area, if they can get above that and start trading above that, that will really decrease the possibility of there being much of any downside here and might mean that they're going to go blowing through to new highs again. I wouldn't expect either of that to happen quickly, but getting above 146 and continuing to trade up there would be more strength than we really should have expected for this week. So that would be a very positive sign. And they could still break down to the support. And as I said last week, after this big move up, they could break really, really hard and they'd still look pretty good. So I'm not willing to throw the towel in on them, but I thought they'd show more weakness than they have so far. That's rather impressive so far. Stocks, well, stocks are frustrating me. I really want them to go down. Not because I think that's what they're going to do, but because it would make the analysis so much better for me. I'd have such more confidence if they'd go down and test this low. Markets don't V-bottom very often or spike off of a low very often. They usually dink around and at least retest. I'm still expecting that to happen. I gotta accept that they might not. They might be strong enough not to do that. That'll make the analysis more difficult. So after last week closed really strongly and even extended a little more volatility than the previous couple weeks, this week has turned around so far. We were kind of looking for the 2714 area at minimum for resistance this week, but they've turned down, and this is the key area here. The upper moving average for this week is 2605. As long as they hold in that vicinity, they'll still look very positive. They'll look like 2714 or even higher as a distinct possibility this week. Now, if they can break down, and again, I hope they do. There's all they could hold 2572, the 2475 to 2509 area, right near this lower moving average and down to this. You see this kind of like spike in the green line down there, right at that level. I'd really like to see them go down there. Now, if they would go down that far and hold without going too far below 2475, that might be all the retest we get. I mean, we could make a higher low and turn up from there and be very positive. But I would like to at least see a retest down to that level again, not because I think that's what they'll do, just because I would like have a lot more confidence in the analysis if that's what they do. I'd understand what they were doing. So that's what we've got for you today. I hope you can find something profitable to get yourself into.